Okay, great.
So, just as a brief background, I I'm ex-Amazon, ex-IBM. I got really interested in the crypto space around 2014 while I was starting a business called Amazon Lending in Europe. It made commercial loans to all of the companies that sell their products on Amazon's marketplace. These are 2 million small businesses, and we really help them grow by giving them more capital to grow their business. But I had to deal with the financial regulation across Europe, and so relationships with not one but a half dozen different regulators, and getting money out of one account into another account. And so when Ethereum started around that time, the promise of it was obvious, that to me at least, that this is how we would program money in the future. And as a result, I left Amazon and joined IBM, and looked after IBM blockchain platform for a couple of years. Don, who I just invited to the stage, worked with me at IBM, and we got IBM to join Hedera Hashgraph. It's a network, a public DLT, for the purposes of bringing these huge enterprise use cases to cryptocurrency. But the problem was that you always ended up having to sell the HBAR token itself back into dollars or to another stablecoin in order to actually do real business. And so you had to invite the banks right back into the process, which again doesn't help solve the original problem. So about this time last year, after seeing the DeFi explosion on Ethereum, the concept of ICHI was born. We launched the first edition of it in last November. The response was fantastic, but we had built it in 6 weeks, so as a proof of concept. So we spent the last 6 months rebuilding it with audits from QuantStamp and Solidified, working with lots of projects in the space, getting to know them, getting to know their needs. And we relaunched about 6-7 weeks ago, and we've been creating a new one token, as we call it, an ICHI stablecoin for a new community about once a week. The demand is huge. We actually can't get to all of the projects, but one of the VC firms backing us, Collider Ventures, had a good relationship into the Shapeshift community and Fox, and they all suggested, you really need to get plugged in here and make it one of your top priorities. So that's the background behind the proposal. It's a bit of a long story, but so excited to be here and look forward to the next questions.
Awesome. Thanks, Brian. Willie and John, will you guys just give a quick intro as well?
One sec. Yeah, so my name is John. I am a co-founder and current chief product officer at Shapeshift while we are still winding down the centralized entity. And happy to be here. I've been really interested in this ICHI proposal, learning more about it, and it seems like a fascinating concept. So excited to learn more today.
Hey everybody, my name is Willie. I am currently Principal Product Manager at Shapeshift and will be transitioning to Head of Decentralization at the foundation when it's established. And yeah, I've also enjoyed, I appreciate the ICHI team reaching out and making a great proposal, and I've enjoyed, the more I learn about ICHI, the more I like it. So really excited to dive deep on this call today with Brian. And I'll pass it to
How about you, Marley? Yep.
Hello, there we go, nice. Technical issues. Marley here. I'm a big community member and excited to learn some more. I've done some research on the ICHI stuff and definitely excited to learn some more.
Great. All right. Well, Brian, I'd love to just turn it back over to you, and we can kind of focus more on the specific proposal and let you give a little deep dive there, and then we can ask some questions about it.
Oh, okay, great. I'll just break it into the most common questions that I get and kind of talk through it. So again, the proposal is to create one Fox. That's what we call it. It's not a single Fox, but a one Fox token that is always worth $1. ICHI is actually the Japanese word for one, so that's the brand. But this stablecoin, if you will, stable currency, is not like others. There's actually no other decentralized stablecoin that is minted and redeemed for exactly $1 of value. That was a principle that we put in place because we saw that while MakerDAO started first, and I love MakerDAO. I was on their conference calls back in 2017. You have to have more than $1 to get a single DAI token, and as a result, these stable coins like USDC and USDT have taken 90+% market share, actually 95+%. And so again, the first principle, you mint for exactly $1, you redeem for exactly $1. Now the novel design is that when you mint, if you minted with just Fox tokens, the system would go bankrupt right away because just a small fluctuation in the Fox token price would cause a panic. People worried about not getting their dollar back, and that would just precipitate into a collapse. So it actually has a minting ratio. You pay the dollar in two parts, part Fox token and part existing fiat-backed stablecoin. Now, when you're done with the Fox token, all you get back, the one Fox token, all you get back is a single USDC. Now, it could be any other fiat-backed stablecoin, but we like USDC a lot because of, we respect the relationship with regulators. We think they have one of the best ones, and we consider that a regulated off-ramp for the Fox community's stable token. So that's the basic mechanic. You basically pay $1. You get $1 back when you want it. What happens in between is the most exciting part. The key here is that you want more revenue to go to Fox holders, right? So in between, instead of that value being stored in another bank that's not paying benefits to your community, that value can be invested on your community's behalf. It can accrue interest in DeFi. It can be used to pay incentives so that people adopt Fox supported or Shapeshift supported products. It can be used to pay better interest when people decide to save with one Fox or Fox itself. So again, that is the actual end goal, is that this value that accrues when you enter an economy belongs to your economy. You don't have to exit to another currency when it's time to do real business.
So something I'd like to ask Brian that
Sure.
I think is worthwhile for the community and confused me a little when I was first reading about ICHI is maybe just kind of run through an example of what the collateralization would look like to get this started. Let's say the Treasury wanted to mint, 5 million one Fox, or 5 million USD worth of the stable coin. What is actually required for it to do that? How much USDC does it need to acquire? How much Fox goes up? And I think that the ratios can be actually determined by the community, but how does one go about setting that up in such a way to make sure it's safe and you don't, immediately get a bank run, withdrawing USDC, et cetera?
Yeah, it's a great question. And it's also one of the most difficult one to answer because every time somebody asks it, they're assuming some setup that may or may not be true. So what I have to do instead is talk about the range of setups and then the ICHI minimums, and then people. So basically, the policy deciders pick what's best for the community. So ICHI's range of options, like from most risky to most safe. In a most risky manner, you could say, I don't really care about USDC or safety. I'm just paying in Fox tokens. As long as we have enough Fox tokens left in collateral, people will get $1 back. If we don't, so what? And that seems it seems foolish to me, or people who think very safety oriented. But there are actually hundreds of projects in the space that attempt to do just that every day. I mean, and they blow up, right? Like there's a news story of a stable coin collapsing almost every day. So there's absolutely demand for that fractionally backed, pure volatile, like dream, right? So I'm not. There will be people who probably take ICHI's model and do that. I don't personally support it. Second, you could make it the most safe stablecoin in the world. You could actually implement a policy that says this stablecoin's treasury will make sure that it always purchases at least a single USDC for every outstanding one Fox token. And then on top of that, it will build a treasury because now it's storing the USDC, it's earning interest, it's earning some fees. And maybe we don't grow the treasury quite as fast. Maybe we don't drive as much scarcity to the Fox token, but we've made the safest design in the world, even way more safe than even USDC or USDT. Now, ICHI's minimum is that you have a 150% treasury reserve ratio for treasury sizes beneath $1 million. And if treasury sizes are above $1 million, it needs to be more like 200% treasury reserve ratio. Now, those numbers were settled on by experimentation. So we launched these 5 different stable coins in version 1. Some of them were supported by different communities. Some weren't. We grew a Bitcoin one. We grew an ETH one. And we learned what happens when markets collapse. What happens when things, it's been a wild 9 months in crypto. And we just settled on, with these metrics, we're pretty confident that an ICHI stablecoin is unlikely to fail. And even if one does fail, there's probably enough in the system outside of that particular community stablecoin to make people whole. And we think that it's a risk profile that's easily insurable and in DeFi insurance platforms like Nexus Mutual.
Is this something that like our treasury would have to be like monitoring and like actively managing? So like let's say Fox goes from $1 to 50 cents. If I were the treasury manager, would I be like have to put more Fox in, or is it kind of self-adjusting? Sorry if that's an ignorant question.
Yeah, no, it's a great question. So today it's set up so that these adjustments really don't happen very often. That's the I think maybe. Of course, I always look at everything every morning. It's a free service, but it really isn't time intensive. We are working on automated ways, but for right now, we actually prefer it's not automated. So what happens is the policy is passed, and if it hits the policy thresholds, our ops team typically takes care of it today. If the community wants to have their own ops team, that's a possibility. And we're working with some of the, DAOs that are now specializing in DeFi operations to explore partnerships and third-party options for operating it. So, but for right now, the actual action does take place with a multi-sig transaction. The question is just who's behind the multi-sig. We do have it pluggable where a strategy contract could get poked by anybody in the world, and that person gets rewarded for doing so, and the rebalance occurs. We just haven't wanted to take that step yet.
Cool.
Yeah, Brian, I definitely had the similar, sorry, Marley, just a similar question. Like, can you explain like the access? You just kind of went into it with that multi-sig, but like who ultimately has access to that treasury and can it be the DAO?
It absolutely can be. So what, let's go, some communities say, hey, you know what, the ICHI DAO, we'd like them to hold the keys, which is fine. They're elected and the ICHI DAO can do it. Some communities say, we want the ICHI DAO setting up the transaction, but in order for the transaction to execute, at least X number of people from our DAO have to sign it, which is possible too.
I like that.
And then it's also possible just to transfer full ownership of the multi-sig to your DAO, and then your DAO would be responsible for both creating and signing the transaction.
So Brian, something that I had read when I was researching ICHI was that when you create a stablecoin like OneFox, the OneFox holders are basically can govern that treasury. But what I'm hearing now is that I haven't heard anything about OneFox holders actually being able to control it. Is that another option? Or
yeah, so the question there is more, when is the right time? That is the vision. So what you don't want to do is have like 5 OneFox holders and they all just decide to take all the treasury, right? So when we pass an initial proposal to make a one token, there are two options. One is maybe OneFox has its own. You have your own snapshot process, and we say when we create it, OneFox holders won't govern this. It will be the Fox snapshot as calculated here. And if you participate in this token, that's the governance you're agreeing to. Now, the other option is that OneFox holders are going to be the ones who make the decisions, but you have to hit some I guess, decentralization and quorum statistics before that happens. And we typically say it's like greater than 10 million in circulation. Nobody's owning more than 1%. Like you have to be pretty confident that it's robust enough that it's not like similarly to the Fox token itself. You don't want to do it too early. That's the best way to put it.
Got it. Yeah, I like the idea of moving towards that, but starting by having the Fox.
Which you can also start with, either ICHI governance or Fox governance, and then either one of those could switch to OneFox governance later. What I like about the OneFox governance is that it aligns the interests between the people holding the token and the people governing it, even a little more closely than if it was governed by Fox holders. So Fox holders might say, let's just maximize purchase pressure on Fox. Who cares about risk? And then the stablecoin holders would be like, well, we care about risk. What if this isn't worth $1 anymore? Right? So you have a better alignment of interest if the people holding the token vote on the risk factors.
That makes a lot of sense. I agree with that. I like the idea of Fox governance to begin, but eventually moving towards OneFox governance.
Yeah.
I think something that would really help. Sorry, John. I think something that would really help us understand OneFox and also help us assess this opportunity would be if you kind of gave us I understand there's a lot of design space here, and it's pretty customizable. But what would you, if you were to propose like the ideal OneFox setup? What would you propose as some of those initial parameters? And I'm curious what that would look like. I think that'll help us visualize it.
Yeah, so we work through that in a series of questions, and we don't have to get through them all here, but I would like feedback on it. One is basically how many stable coins do you want to exist, right? So it seems kind of a strange question in this space where everybody creates farming schemes and the more the better, but we don't think about it like that. Like people need to be able to purchase the stablecoin with low slippage. There are some additional use cases imagined, like maybe you pay grants with it. Maybe we we have an upcoming ICHI vaults project that could be used to provide liquidity on the Fox token with one Fox. Like, so that there are use cases we can go through, and you can estimate the demand for the use cases to kind of reach that number. So you come up with a number. This is how many you want to mint. And your next question is, how many Fox tokens should people pay to mint this many stablecoins? Right. So that is basically the desired minting ratio. Now, I really like minting ratios around 75 or 80% to get started if the token is as liquid as Fox. So if say you said, okay, we want to mint 5 million, we want people to pay basically $1 million of Fox tokens when minting, but we know we have to hit that 200% treasury reserve ratio or we'll have to start selling. So then you use that number to calculate an initial loan to the treasury so that it's significant, it's backed enough that you can hit the risk metric while requiring that much Fox to be used in minting. I know it's not fun to describe math in a
No.
over the phone, but we write it down and then it makes perfect sense.
I kind of follow on question to that, Brian, is like, Fox has been somewhat volatile, hit over $1 and it's, I think, around, I haven't checked today, around 50, 60 cents sort of mark. I believe back in May, I'm happy to be wrong on this, I think the UST, the stablecoin collateralized by Luna, became under-collateralized at some point. How do we deal with the situation of like recollateralization or something so that, one Fox essentially it doesn't become unbacked?
Yeah, so what we've done to date is this upfront loan and an initial minting ratio, and then once that, we also set reward rates so that people actually want to mint that many, right? So that was the last step. But once that initial minting surge is over, which usually lasts a few days, we either deposit more because we want to mint more, or we dial the minting ratio back, and now everything's kind of stable. Now, if the Fox token then declines in value, rapidly, what you have to do, faster than you can earn yield, etc. So its declines in value are happening faster than you can earn yield. Then the question is just, do you deposit more Fox tokens, or do you begin to sell some for USDC? Now, when we sell them for USDC, we don't like to place any sort of additional pressure on the price. So we actually try to do it early enough where you're placing Uniswap V3 range orders that when it trades up, it begins to rebalance instead of when it trades down. The problem with things like Terra and Luna, and by the way, their model was one of my inspirations because they have so many hundreds of thousands of people in Korea using their payment app for the rewards, and that just proves how powerful this stuff is. But the problem with their model is that when you try to get your money back, it mints a scarce token to pay you. And then people take the scarce token that they receive upon redemption and they sell it. And that's a death spiral type thing. So what happens is when you do a system like that, like the Luna system or the Frax system, you always have to think through how you defeat the death spiral. You have to lock up a certain portion of people long enough to survive. When you go to their telegrams, everybody's always like debating whether or not it will happen. There's like a high sense of stress in there. But with ICHI's model, everything's massively over collateralized. So we just have time and space to react rather than selling into a market panic.
Just make sure I understand the numbers correctly. So we're lucky if Fox is like 50 cents even today, so this math's a little easier. If we were looking to do like a 5 million stablecoin mint, we would need 20 million Fox at 50 cents. Is that for 200% collateralization? Is that about right?
I'm going to lose the math talking verbally. Here's my simple heuristic: is that at an 80% minting ratio, we found for every dollar deposited, you end up causing somebody else to purchase between $1 and $2 on the open market, right? So when 1 inch supplied $100,000, the users had to buy $200,000 worth, right? And so what happens is, at scale, you can actually get in this situation where the people are paying in the scarce token, but even more people are buying it to mint more of the stable coin, and the scarce tokens previously supplied are going up in value because of the ongoing purchase demand when minting more. That's kind of the really like powerful scenario you hope for, where you're pulling more people in, more people are wanting to save in this token, more people are wanting to deposit it in liquidity pools because of Fox rewards or other rewards. And that's creating purchase pressure on the Fox token, making the treasury behind it more valuable.
So related to that, Brian, can you go into a little more depth of like once the treasury sets up an initial amount? So in Marley's example, that's, let's say the treasury mints whatever the ratio is, but like 10 million one Fox. At that point, once these things are set up, can anyone come and collateralize their Fox and mint more one Fox, or can it only be done by the treasury? Or what is
actually,
the mechanic of that?
Actually, in all of the previous descriptions of things, everything was done by the community, not like every minting action was taken by somebody in the community. There wasn't special ones taken by.
I see. So anyone in the community comes and they put up their ratio of whether it's 80% Fox, 20% USDC, or whatever the ratio is to mint one Fox, and so they're
Correct.
doing that, and that's how that treasury of one Fox grows.
Correct, and that's what you really want to. If you just took Fox that you had sitting idly somewhere and you said, I'm going to mint it I'm going to mint stable coins with it and back them, you've created no purchase pressure on the token. In fact, you've just like morphed it in a bit. You've created a new way of selling it, actually, if you really think about it. And instead of creating a new way of selling it, you want to create a new reason to buy it.
So that is really interesting. And so I understand that it's ideal for the community to mint the one Fox and to put in. It's a great also feature for the community to be able to take their Fox and mint some stable coins. But I also see like one of the big benefits of this is right now the DAO Treasury has a lot of Fox, and there's a desire in the community to have some more stable coins in the Treasury so that we can make payments in stable coins. We have at least have that optionality, as opposed to right now we're pretty much limited in making payments in Fox. So there's another.
It's entirely possible, by the way, but it's just and you wouldn't think that these actions matter at all. It absolutely could happen that way. The Treasury itself is another member of the community. Like, let's take the Uniswap example where they just gave out a $20 million uni grant. And the first day the grant recipient received it, they sold $10 million of uni for USDC. Right?
Mm-hmm.
Another way of thinking about it is I could have given out a 20 million uni grant, and that grant recipient could have sold 8 million instead of 10 million, right? Like it's the net effect. You could mint it and then just give them the one uni for in like this example. And by the way, I would mention that because I was working through the proposal today where we are submitting a uni proposal on Wednesday. But the when in doubt, I just think that it's always a little better to have, like, if there's a choice between having a centralized team do it or people in the community do it, I just have a bias towards creating more user experiences and more engagement. But it absolutely can happen either way.
So follow-up question. Basically, does it make sense for the Treasury to kind of seed this one token reserve? Does it? And the context there is we have another proposal that's going through the governance process right now to mint range tokens, and that's kind of the first. That would be the first step we'd take to actually diversify the Treasury and get some stablecoins in there without just trading Fox for stablecoins on the open market. And I'm curious, it's looking like we're going to end up with 1 to 2 million. If this proposal passes, 1 to 2 million of stablecoins, and then of course we have a large treasury of Fox tokens. Would it make sense, do you think, for the DAO, the Shapeshift DAO, to kind of seed this one Fox treasury with a mix of like some stablecoins and some Fox, maybe just some Fox? I see it as a potential way where we could take this 1 to 2 million in stablecoins, launch this one Fox token, and then the DAO treasury could end up with more than 1 to 2 million of stablecoins, and then now the community can come participate and mint more one Fox.
I have looked at the UMA range tokens, but I'm not just an expert on it yet. I'd like to go in. I'd like to answer two questions: one, your budgetary needs, and two, take a closer look at UMA before I come back with what I do. My sense is that some combination of both is probably right. They do different things, but I don't want to jump to that conclusion.
So I want to give an opportunity, Mr. Nerd Hair. It looks like you've joined the stage. Want to ask a question here?
Yes, please. I'm a security engineer at Shapeshift, and I'll be working with the security work stream going forward. I can make an 80-20. I can hold an 80-20 position in USDC and Fox today. All I had to do is buy 80% USDC and 20% Fox. And crucially, if I
He just cut out. Or did I cut out? Can you hear me?
I can hear both of you.
Yeah, I hear both of you.
I can't hear him. So was the question, what's the difference between creating a diversified portfolio of 20% USDC, 80% Fox, and doing this?
Hold on, Mr. Nerd Hair. Sorry, I have gotten also another comment from the audience that they can't hear you as well. John, you want to try to?
Strange. I can hear him. I can hear him fine. Mr. Nerd here. Let's give him a second to complete his question, and then I can paraphrase it. Oh, that's way worse. Whatever you did is terrible.
Okay,
Sorry, I just forcibly muted him.
Same. Okay. I think we have had this problem before where like people on the stage could hear the speaker, but people in the audience couldn't, and it sounds like Brian's having some issues too. So Mr. Nerd Hair, sorry, maybe you can figure that out.
Go ahead and then
John, I think you were going to attempt to restate that.
Yeah, or why don't you just post it if you can? Yeah, go ahead, Mr. Nerd Hair.
I can hold a diversified portfolio today, but critically, if I do that,
posting it in chat or something.
Oh boy, I will.
I can hear you again. It's good news.
Oh, now Brian can hear you.
I can hear him.
I can hear
him. That's very weird. Just go ahead and try it, Mr. Nerd Hair. Just everyone.
Okay.
If you can't hear him, just give him a second, and then we'll repeat it.
the upside of Fox other than what I get paid for holding one Fox through incentives. I get exposure to the downside risk of Fox because if the Treasury fails to rebalance, or if I think I understood from your forum post that if there is a run on the bank, so to speak, that redemptions can be halted for a period of time. So if those are real downside risks, I wouldn't characterize a token with those downside risks as being always one-to-one redeemable for USDC, because it's only redeemable for USDC if the rebalancing is performed as appropriate by the people who hold the Treasury, and if the run on the bank, lockout doesn't happen. How am I understanding this correctly?
Yeah, by the way, I missed the first half of it. I counted to 20, trying to think that maybe he's coming back, and when I got to 20, he started talking again. But I understand the essence of the question, and I'm gonna break it into little smaller pieces. Okay, so one is what happens upon the initial setup of the portfolio. So in your example, say I had $100 of Fox tokens. I'm going to actually sell $20 of them for USDC. Right? I'm just going to sell them. That's going to create downside pressure on the price. There is no initial selling of Fox tokens in the case of minting the one Fox. Second, with future selling actions, in the case of one Fox, I have a bit of a choice, which is, do I take a little bit more of my community treasury and move it to this wallet, or do I keep it where it is? And most crypto projects have very large idle treasuries, and both of these wallets belong to you. So it's like taking it from your left pocket and putting it into your right pocket, right? So there is an adjustment of risk there, but at least it's not, you have a way of preventing the additional selling, right? Now, on the redeem side of things, it's trivially true that if every single person wanted to turn their token in at the exact same time, the last people to leave would not get $1 back. That really does sound horrible. But there are a couple of things. One, that's never happened with a fiat-backed stablecoin. It's never happened with an over-collateralized stablecoin. It's never happened with any ICHI stablecoin. So one, I consider it fairly unlikely. Two, if it does happen, the remaining 20% of people that didn't get $1 in that very moment, they're not penniless or powerless. They hold the remaining votes to this huge hoard of crypto, right? Like their voting power just increased. There's a counter incentive to the supposed bank run, right? So that's the other thing that I think is important there. Now, on the last point, which is have it here at all. In your instance where you put the money in USDC's bank account, they're earning all the interest and they're spending it for their shareholders, and it's quite frankly theirs. And by the way, something could go wrong with USDC. It's not like it's been around forever. But at a minimum, you're not benefiting your community there. And in this case, that treasury can be invested on your behalf. It can earn interest. It can provide liquidity to the Fox token itself. It's not idle, it's yours, right? So what happens is it's more of it's a DAO having a bank account for a DAO participating in DeFi versus a DAO that is selling off their coins for a centralized stablecoin.
I'm perfectly
Thanks,
okay
Brian.
with the Dow investing portions of
Mr.
its
Nordhair?
treasury in a yield-bearing manner. What I'm concerned about is the Dow investing portions of other people's money, the 20% that whatever the collateralization ratio is, and controlling the risk profile of the holders of one Fox. I wouldn't be comfortable with holding that token. And I would want to swap it immediately if I got it as payment for.
I did see that. I did see that comment, and I do agree that there's a bit of a Lindy effect with stablecoins in general. So, and if you're not comfortable doing something, you certainly shouldn't. Now, there's been a lot of people, though, are more uncomfortable with trusting this centralized entity and vague reporting than they are with knowing exactly how the system works, knowing that their token represents a vote and what happens with those assets, and knowing that the whole thing is governed for their benefit. And so we haven't, in fact, seen people rushing to the gates on any ICHI stablecoin to date, probably for those reasons. Like they are believers in their project and what the project's trying to accomplish, and they actually many of the biggest backers of projects really like the day that they can mint their own stable currency.
Yeah, so
But people need to make individual choices, though. There's nothing, we should not prevent them in any way, shape, or form from making those choices and picking whatever they trust the most.
It sounds to me
So
like if you don't trust,
sorry, Mr. Nerdhair, I'm going to cut you off here. I think this is an important topic. We've really dug deep on it. I do definitely want to give people from the audience a chance to ask questions as well, as we only have 15 minutes left here. So if you do have a question, I do want to encourage you to ask a short, brief question. Don't get too stuck on the story. But yeah, so if you want to raise your hands here, now would be a good time to do so.
While we're waiting, I have a quick question. Are these considered loans? Not tax advice, but that's really appealing.
Yeah, so we struggled with you're talking about the initial deposit to
When
the
you
treasury
mint.
that enables
Yeah.
a lower minting ratio. So it's most accurate just to say you basically have two wallets and you moved it from one wallet to the other wallet. It's still yours. But that's a lot of words. So we just say like you lent it to your other wallet. If you want to undo it and send it back, you can. You have to make sure that the stablecoin holders are whole. Like you can't just raid the treasury and send it all back without any rebalancing or any making sure that the risk metrics are maintained. So in other words, it's a conditional transfer. If I transfer it here, it is responsible for making sure that that stays worth $1. So I just can't send it back without thinking about that, but it's still mine. I don't really know a better word than loan, but there's also no interest or due date or thing like that. Like, so it has other characteristics that are different than a loan.
All right, and there were no questions, but there was a request for Mr. Nerdhair to come back up and continue on that talk. So, Mr. Nerdhair, come on back up.
Quickly before we do that, I have a kind of question that I think might help illustrate or might be on the same thread as Mr. Nerdhair's, but might help, I think, answer it maybe for all of us. So two things come up for me just listening to Mr. Nerdhair's question. Brian, maybe you can help with this. One is that, can you give an example of because to me, the obvious thing that would help against these problems is if people have an incentive to actually hold and use the one Fox as opposed to redeeming it, which is the hope.
Yeah.
Can you give an example of how that's working in other communities? And then the second part of that question is, does it ever make sense, or have you seen other communities, once they have minted or people have minted, their one tokens, do they ever set up actually farming opportunities? Because if I could sell my one Fox through a pool as opposed to through the treasury, then it wouldn't cause the same effect if there was actually farming opportunities with that or liquidity in pools of the one Fox itself.
Yeah, this is what I hinted. I'll just state it. I'm going to state it bluntly so that it's just super clear. People switch from one payment instrument to another for better discounts. People switch from one savings instrument to another for better savings rates. Okay. Because the one Fox stores money that you can use, it earns yield with the money backing the stable currency that you can use, you can pay bigger discounts and better interest. I don't think that for some people, those bigger discounts and better interest might not be enough because they're concerned about things like Mr. Nerdhair mentioned, which is completely fine. But there are a lot of people who would say, I'll take the better discounts, I'll take the better interest. If I'm really concerned about risk, maybe I go and buy an insurance policy, right? So now I feel even safer. But I can probably cover the cost of the insurance policy and still earn more. So in the case of Wing.Finance, which was our first version 1 partner stablecoin, they are a lending platform like Compound or Aave. You go to it, you supply your scarce crypto, and you take out US dollar loans. You go to it and you supply your dollars and you borrow crypto, maybe sell it to short it, whatever you do. Previously, they were providing Wing rewards and the stablecoins being deposited and borrowed for USDC, USDT, etc. The problem is that those people never got any exposure to the Wing token. They would earn the Wing rewards and just simply sell them. So now you can afford to pay less interest to both sides. They implemented the one Wing and they could pay more interest, both the people providing dollars and borrowing dollars. One Wing has 5x the deposits of the next biggest stablecoin now. It's just that simple. People get better interest, they switch. People get better discounts, they switch.
Thanks for asking that question, John. I think that helps understand things a lot. And to follow up on your second question, I'm really curious kind of what you think are the best practices for driving that liquidity. Like, is it a Uniswap V3 pool? Is it a Curve pool? Is it pairing one token with another stablecoin, or is it pairing one token with Fox? And I'm also very curious, is ICHI, I see you guys have a farm and that there's some ICHI rewards for some of these other one tokens to drive liquidity. Is ICHI still offering, and would you guys be interested in incentivizing a one Fox pool with ICHI tokens?
Yeah, so great questions. So on the liquidity side of things, when we set off to make this project, and again, it started with level 1s in mind, but I quickly realized the problem was bigger in DeFi. The AMMs store the most stable coins, so we started talking to all of them. In fact, we haven't even listed on a centralized exchange. We got rewards for our token from 6 or 7. They all have different strengths and weaknesses, I would say, and they all have programs worth participating in. So it's not there's no exclusion here to my statements. But one of my favorites is Bancor, because you solve a big problem there. If you get past the Bancor whitelisting process, which should not be an issue for a community like Fox, you can provide only Fox tokens to the liquidity pool. And what they do is they mint BNT tokens for the other side of the liquidity pool. And then if you hold those Fox tokens for 90 days, you'll receive impermanent loss protection, which eliminates a major risk for liquidity providers. And so they kind of provide this feature where if you had some impermanent loss, they're going to mint more BNT and make you whole. And I think that's just an extremely interesting proposition. What people worry about if they're super bullish on your coin is I don't want to put it in a liquidity pool, because when other people are they're going to swap for it and they're going to take it from me and I'm going to have impermanent loss. And it kind of eliminates that. The second most interesting development is Uniswap V3, because you can concentrate liquidity and get much higher capital efficiency. Some of the APYs on pools that aren't even incentivized in Uni V3 are higher than incentivized pools on other AMMs at the moment. So that's a very important development. To that end, I believed in it so much that ICHI is creating ICHI vaults. They're in the audit process now, and I won't get into what exactly they'll do, but let's just say they'll provide an excellent additional use case for OneFox on Uni v3.
Got it. And the follow-up question, is ICHI still offering farming incentives for projects that launch a one token?
Yes. Oh, sorry. Yes, absolutely. So what we do is we agree on, by the way, every ICHI is distributed through farming. So there's actually just, it's always been our policy. It was fair launched with, in no pre-sale, no pre-mine. It just, all of the ICHI were put in the farming contract and all of them have come out of it. So we'll continue to do that. The way we settle on the amount is that the other project says, okay, this is how many we want minted initially. And we're like, okay, great. That's going to take this much in ICHI rewards. So now we know how much we're spending on that. If you're just using that as the first initial use case. And then we just ask them to match the value. But when they match the value, we do it by minting the stablecoin itself, depositing it and holding it for 12 plus months, which is purposely done to even further eliminate Mr. Nerd Hair's worry, right? Now I know who the person last out is and it's not me, right? It's just one more thing that you can do to make people feel safe with it. So that's the mechanism we've used where for those initial rewards, both projects just split the cost 50-50. And then from there on, once you get past the initial period, it's not split 50-50. It's just all ICHI from then on until there are no more ICHI.
Very cool. So just to be clear, is it like a security deposit where after 12 months that Fox is returned to the treasury, or what happens after the 12 months?
It's just that it just belongs to ICHI because again, ICHI paid those rewards, and so to match ICHI's payment into the system, you paid the one Fox essentially.
All right, I want to take one final question from the stage, as we're got 5 minutes left. So, anyone want to take that?
I'm super curious. I mean, if any audience members don't have questions, like, would anyone be willing to maybe even just post in the stage chat? Like, would you guys be interested in getting paid in a one Fox token versus another stablecoin? And let's imagine that there are some discounts, like even like. And you could even say what discount would get you over the threshold. Like,
no, what you should say is, would you be interested in getting paid 10% more in one Fox, or with the condition that you have to keep it for a period, like you don't convert it right back to USDC like Mr. Nerd here proposed, something like that. Like I think an offer like that is very compelling because you're basically just giving them more or enabling them to earn more interest. Of course, they can also take it and deposit in the ICHI farm and earn ICHI, right? But anyway, yeah, I was just helping you craft your offer.
Well, so that's a good question. You think 10% is like the right kind of discount to offer, bonus to offer?
If they have to keep it a year, right? Like, or something like, so maybe the grant request was to cover 3 budgetary years. And so 2/3 of it, they're going to keep for future years. Right, like you just need to give them some level of incentive to hold it there for that period of time. Of course, they could deposit it and double dip. I don't know.
So this is new to me.
I would sweeten it until they said yes. Honestly, so that's how I would do it.
Well, and at some point, it doesn't make sense, right? Like if the minting ratio is 20%, then it probably doesn't make sense to do like a more than 20% bonus. But you're saying something I'm curious about, I haven't heard yet, is you're saying like we could offer that incentive if people were to hold it for a year. How is that enforced?
Yeah, it is. Now we're like spitballing an agreement, probably not best. But if they're getting a grant, there are already terms to that. You got a grant to do something, right? So one additional term could be that some of the funds are used in year 2 or year 3 or after said milestone, and that portion of the fund needs to remain in one Fox until it's needed.
What about the example of people who are getting paid like every 2 weeks or every month, for instance? Like, if we were to consider giving them some sort of bonus for receiving one Fox versus Fox as payment, what do you think?
If they're going to just take it and convert it, not just to USDC, but take the USDC and convert it to fiat and deposit it to their bank account right away, it's probably not worth much of an incentive.
So maybe it's the incentive is, or the offer is basically accept Fox or get paid in Fox or get paid in one Fox. And there's not necessarily, we don't even necessarily need a bonus because for some people, they'll just be interested in getting paid in a stable coin that's backed.
One thing that you can do that we do, actually, this is my favorite plan. Now that we're just making up plans in front of like 80 people, you use Sablier.finance or a similar streaming system, and you say your grant is $100,000 denominated in one Fox. I'm going to put it in this system, and I'm going to stream the $100,000 to you continuously over 1 year. And then without doing anything, that the entire amount's going to remain in one Fox for that period of time.
Got it. And we do use Sablier right now. But right now, I guess we have 1 minute left, but this will be a good way for us to continue the conversation in the forum. The way that a lot of payments we envision happening right now will be through Colony. And Colony does not yet have the ability to like pay somebody with the stream. It's just like a payment, and you get transferred the funds as soon as the payment request passes. So in that case, I'm very curious to hear from the community. Like, would you guys want to get paid? Would you be interested in getting paid in one Fox versus Fox, even if there was no discount, basically, but you kind of had that choice? If so, I think that it could make sense for us to proceed and continue exploring this.
Okay, we'll pay them more in ICHI if they take one Fox. Jeez, we got to give them a good deal.
That's
Right. Well, there's a great conversation still happening in stage chat. So if anybody wants to continue on there, that is available for you. I want to give a big thank you to Brian. You really just hit all the questions. We just kept throwing them at you one after another. And thank you so much for taking the time to spend with us today. Would you like to give any final thoughts before we wrap up?
So I had this big panda head in my office, and I wanted to wear that to the meeting, but I wanted it to be a fox instead of a panda. So yeah, I want a big fox head if this goes through. I'll wear it.
We actually have those.
Yeah. That sounds awesome. Well, if it goes through, we'll use someone Fox to buy you a fox head.
Yeah, I just want a fox hat. Yeah.
All right. Thanks, Brian. And just a quick reminder, we have our third weekly governance call at 5 p.m. Eastern today. It's going to be in the Discord as well. So stick around for that. And thanks, everybody, for joining us.
Thanks, everyone. Thanks, Danielle, for the awesome moderation and hosting. And thank you, Brian. That was super useful. And I feel like I understand this whole concept so much better after this call. Thank you.
So go put $10 in and try it out. Talk to you later. Okay.
Bye, everybody. Thanks.
Thanks, everyone.